Well, it just seems to be a little bit less work to follow a whole bunch of stocks all the time.
The amount of, and I've been looking at this, right? When you look at the hard data returns we have a lot of data returns, but we know what tradable and all that kind of people's returns look like. But the big thing is here, right? The amount of time an active stock trading system takes is huge. And then when you then put that into context of also success rates and attrition rates for majority of the people, this is very high. So you look at this and you look at this, it becomes a daunting task. Once you get past that exuberance of enthusiasm of, hey, I can do this and I can make $1 million by the end of the year and I can own a white Ferrari in 2 years and all that kind of stuff, right? Once you get past that and then you get to the grind of it, it's and then you start to see it's not as easy as it looks. And we know that because of this, right? If 96% of pros over a 20-year period can't beat the benchmark indexes, it's a problem. In fact, the other two things I think it was around 2002, there's a famous story, there's a famous thing, I think it's in Warren Buffett's letters or whatever, from his Omaha thing. He challenged fund managers to, over a 10-year period, he challenged, I think it was, you have to give 10,000 to charity for the winner, whatever it was, right? The number was, I forget the number. But he challenged the funds that they couldn't beat the S&P 500 over a 10-year period. Only one fund took him up on the bet. And I think they returned like 3.8%, if I remember right, versus the S&P of around 9 or 10%. So only one fund took up the challenge, probably because most of the funds know they can't beat it in the first place, and they didn't. So it's been proven multiple times. And then the other thing that's interesting is there's an article, you can probably find this on Google if you Google it. There's an article where somebody was doing a comparison of returns of the market, and in their write-up they said in 1987 Trump's net worth was worth about $2.6 billion, and by the time he entered office, White House, his reported net worth was about $6 billion or whatever it was. And so they said from 1987 to his entering office, I forget, was that 2016 what it was, it went up threefold from 2 point something to about 6. But had he liquidated his net worth at the time with hotels and stuff and put the 2.7 billion into the S&P, then by the time he entered office, his 2.67 billion would have become 13 billion. So he would have had more than double the net worth without all the hassle of payroll, people and buildings and running businesses and the whole enchilada, right? And a lot of that money came from the apprentice as well, so it wasn't even businesses. So that's yeah. And then there's the urban legend story of back in the day when the settlers bought Manhattan from the Indians and gave them beads or something. If you roll that forward, if they put that into the S&P 500, which it didn't exist back then, but if they did, then they would have had a net worth much greater than whatever Manhattan's worth today. So those are the urban legends. I don't know. I mean, I think, yeah, and this one also, because of the three timeline horizons, everybody can fit into whatever suits them, right? You're more than 20 years, you're inside 20 years, or you want to fulfill your habit of gambling or whatever, and then you can trade around it. so I need to take a look at YouTube, setting up a channel, all that kind of stuff, and I'll probably do that this week. And just for giggles, I may upload this little segment up there as a test, see what it looks like. But you'll know. I'll let you know if anything happens.
Perfect.
And and then for those of you who are interested, you can just go to YouTube and do whatever you need to do. You can tell all your friends about it.
Okay, we'll look for it. Using YouTube's not all that hard. I probably loaded about 300 or so YouTubes over the last 2 years or so, because I was teaching during the COVID.
Mm-hmm.
So I had to learn it. And if I can learn it, you certainly can learn
it. Yeah, I'm sure it's not that difficult. It's just
no.
It's just you got to spend a little bit.
Yeah.
Time just to get the channel set up and everything else.
Yep.
Yeah. Okay, so it's 7 o'clock. Let's call it here. And yeah, I think there's still opportunities though. I mean, we saw with CF, so don't completely shut down the canceling stuff. Keep trying, just keep trying one at a time, stock at a time, or a couple of positions at a time, and just keep trying to improve your equity curve. Okay, with that, let's say good night, and then I'll get the notes out a little later on.